So on February 19th, 2026, the market just hit a wall. I mean, after 3 straight days of really solid gains, everything just slammed into reverse. So what on earth happened? Well, in this breakdown, we're going to dig into the global forces that caused this sudden drop, and we'll look at the key signals that could tell us what's coming next.
You know, that's a pretty brutal headline, right? But it tells the story perfectly. All that optimism built up over 3 days, just gone. Vanished in a single trading session. It's a classic, sharp reminder of just how fast confidence can flip to fear on the street. So, let's get into the hard numbers.
All right, first up, let's just take a moment to look at the sheer scale of this drop. The numbers themselves really paint a picture of a market under some serious pressure.
Okay, so the Nifty 50 dropped 365 points. That's a 1.41% fall. But you know, the key number here isn't just the drop. It's where it landed, 25,454. Why does that matter? Because it's below that 25,500 mark, which for a lot of traders is a big psychological line in the sand.
And it was pretty much the same story for the Sensex. It shed over 1,200 points, a 1.5% decline. This wasn't just a few stocks pulling everything down. This was broad. It tells you that investors all across the market were basically running for the exits. So, the crucial question is, what spooked them?
So what was the trigger? Well, for that, we have to look way beyond our domestic market. The shockwaves that really hit the street, they started thousands of miles away.
And here they are, the 2 main culprits. First, you had tensions between the US and Iran flaring up again, and that always puts the markets on edge. And then, on top of that, talks between Russia and Ukraine didn't really go anywhere, which just added another layer of doubt. You know, when you're faced with this kind of global instability, investors tend to do one thing: sell first and ask questions later.
Now, global headlines are just one part of the story. To really understand what's going on, we need to pop the hood and check the market's engine, right? We're talking about the technicals, the fear gauge, and which sectors are taking the biggest hits.
It's a great question, isn't it? I mean, fear is an emotion. But in the world of finance, we actually have a tool that tries to quantify it, to put a real number on that feeling of anxiety that spreads through the market. And that tool is the India VIX, often called the Fear Index. The easiest way to think about it is this. When the VIX is low, things are calm, the seas are smooth. But when it starts to spike, it means traders are bracing for turbulence. They expect big swings and they're willing to pay more to protect themselves.
So, what happened on the day of the plunge? The Fear Index jumped by nearly 7.5%. Now, that's not just a whisper of concern. That's the market practically screaming that uncertainty is taking over. And this chart just brilliantly illustrates how widespread that selling was. I mean, look at the metal sector. It took a massive hit, down over 6.5%. Realty, auto, almost every single sector was bleeding red. But then, look at that little slice of green, pharma. In times of turmoil, investors often rush into what they see as safe havens. Why? Because people need medicine no matter what the economy is doing. So those company profits are seen as more stable.
Okay, let's get a little technical for a second, but stick with me, because this is really important. On the daily charts, the Bank Nifty Index formed this exact pattern. It's a classic, and I mean classic, warning signal. Basically, after a positive green day, you get a huge negative red day that completely engulfs it. It suggests the bears have just forcefully wrestled control away from the bulls.
Okay, so that's the what and the why. Now let's shift gears and look at what's next. Because even in a sea of red like that, there are always a few stocks that stand out, and they can give us clues about where the market might be heading. Here are 5 stocks that are each telling a different story. Polycab India is just bucking the trend with incredible strength. ONGC is also looking strong, which makes sense with crude oil prices on the rise. Now look at Kotak Bank. The OI here means open interest. Think of it as the number of active bets or contracts on the stock. A huge spike in OI while the price is falling suggests a lot of traders are betting it's going to go down even further. And finally, Grasim and Pidilite are just signaling a ton of volatility, which means we could see some really big price swings there.
So for the Nifty Index itself, these are the key battlegrounds to watch. Think of 25,400 as the immediate floor. If the market breaks below that, the next logical stop could be 25,200. On the flip side, the ceiling is at 25,650. If we can punch through that, it would be a huge sign that the bulls are fighting back.
And for the Bank Nifty, you know, the one that gave us that big bearish warning signal, these are the levels to keep an eye on. All eyes are going to be on that 65,500 support level. If that breaks, it could really set the tone for the entire market.
And really, this is the million-dollar question, isn't it? You've got geopolitical fears swirling, you've got technical warning signs flashing, and the fear index is spiking. The stage is absolutely set for a major showdown between the bulls and the bears right at these critical levels.
And of course, just a reminder that this has been an analysis of market data for informational purposes. For any of your own financial decisions, please be sure to consult with a professional advisor. Thanks for joining me for this breakdown.